Well, traders, it's Eve from MarketWizards.com, and it's just around noon on Saturday, the 4th of June, 2022, reminding traders to use risk capital you can afford to lose. And we're going to take a quick peek. Do my journaling as I usually do on the weekend, take a broader look as well as a smaller look. Basically do that every day, but a little more in-depth on the weekend. I'm going to focus on these ideas, which are the heart and soul of our system, and try to show a few charts that will support those ideas. And again, this is my journal, and if you'd care to look over my shoulder, let's take a look and dive right in. We're going to go right back to the chart that we had looked at a while ago, a few weeks ago. There's a weekly chart, and this shows a couple of years range to the top, and then a retracement basically that we thought was possible as we caught the head and shoulders pattern and came back, and we tested the 50 back, right? This blue box right here, 665. We undercut that. We came down, and obviously that 491 has been a low so far. And then you can see we've had a 2-box bounce and a little more. This 940 area should catch your eye. This was a resistance zone that we were bumping into, that if you looked at a chart like this, you would see that, and that would call that to your attention. So that is the macro look, and right now we can tell that we are really encompassed in this location right here that we need to get resolved. So for now, we know support is here. We know that's our squeeze pivot right there. And we know we're bumping into some resistance here basis the week's range. And we note that we had a positive week after 7 down candles, 7 black crows. This one could become a spin bar. And by that, I mean that if we take out the high, let's say we are holding this bar and never take out the low, then it's possible if we take out the high, this bar would be a lying bar. I call it a spin bar, and would get back and keep on going this way. And that's what's ahead of us. Nobody knows, but we'll take it step by step. And this is looking at a yearly chart. And if you look at the moving averages, the way I like to do, you can see we're in the funnel right here, where I anticipated that the blue trend line would be coming down and would be bumping into that to slow us down. But we also note the red and green lines, the faster lines, are starting to hook up. So really, this needs to be resolved for a directional move. And noting last year's low as well. Very important idea in our trading. And if you like to look at a chart like this without all the moving averages, then here's a little bit cleaner look. And you can see how I felt we were running into some resistance here based on this chart. You never know until hindsight, obviously, but for now, that seems to be a resistance zone that needs to be overcome if we're going to make further progress. Here's a look at the market first quarter and then the second quarter, and you'll note how this 42.5 area was the low of the last quarter. And I had posted, I thought 952.75 would be our resistance. Turned out that was on the money, within 10 points, close enough for government work. Stalled, and then obviously we had the pullback yesterday. All right, and this is a weekly chart. You'll note I had a target at 48, hit 42 actually, then bounce, same neighborhood. Took off like a rocket. This was your third time through right here. 1, 2, double doesn't hold, 3, bang. And scoots up into the end of the day, and then get the obviously the excess overnight. resistance held, start back down, and you can see level by level where we have the tails and come all the way back down. And this was my primary target, that 500 area, after we broke the middle. Yep, got to break the middle first. And then once you do, you know that this is fair game. Every one of these areas, fair game. And here's the tunnel through time. Love this chart. Gives us an idea of boundaries once we get hit. You can't just trade by any of these, but all of them put together give us an edge. Here's an idea where it was riding like a Keltner, coming on the outside here, and then we come back, we touch, we bounce, we come up and down the goalpost pattern, and then we come back and we stall, and we come back and we break. Obviously, on this chart, we break the mid-uni, come back and touch it, and come right back down. This is a news event, and then we come back and we're hitting the lower boundaries in here. And you can't use these just by themselves standalone, but all of them together give us an edge. Here's the bounce swing. This is from the lows that we had talked about a couple of weeks ago. Of course, everybody claims they nailed the low and so on. And like I said, it really doesn't matter because the market's always moving. We thought, as I showed by that larger chart, why we thought this zone should be a pretty good zone to hold at, and that 655 is still now supportive, obviously, and until we can get back and take that out. And I made mention that realistically, in terms of this bounce, shorts have not been able to do a lot of damage, and we still can't look at this as conclusive that that's it. We know that we can come back and do a 40 back. So this is my next area of important support. And if that breaks, then obviously lower this bar, and then these lows in here. And then this would be the breakout back here that may or may not get retested, but we'll look for that step by step. We already know these areas in advance. Somebody had asked me the question the other day about, the pivots. And I said the market is constantly changing pivots. I think this is probably one of the more important ideas in my system anyways. The market structure means that we already know this. This is like a goal post. This is like a football field, right? And here's the end zone, and here's the end zone up here. And this is midfield. So this is static. This doesn't change other than when the market moves enough that we go to a new frame. So these will not change. And we already know areas like this 1250 on that bounce news that was our resistance if it can't get above it. And step by step, we look for each of these levels to hold true or not. And then we know that we're going to be looking for 3 boxes, one at a time, because you can't go to this box without taking out this box. And you can't go here without taking out this. So these are important pivot battles that you will see all day long based on this static chart, already known. Same thing holds true for any other market like E-mini S&P. Very important part of our work to understand this market structure. And again, these are static. These will not change until the market breaks one of the extreme levels. Okay, this is a 60-minute chart. Somebody had posted online last night and caught my eye, and he was talking about the market, and I said I think the 60-minute chart was the one that was in play today. And again, I don't make things up. If I say something, there's a reason I say it. So this is the reason I said that. The rain line is supportive. We're not able to break that. Had this breakout, and then sideways consolidation. So we're still above this on a 60-minute basis. and we couldn't get up and take out these red and green lines, the faster lines. And then we get down, and this is the funnel where we're trapped between the blue line and the rain line. And that's the funnel. And so for now, using that idea, that's got to be resolved before we go anyplace else. And I started with a 15 and a 30. And then when it started to move down, I could tell that the 30 got beat, so we need to go to the 60. So that's the art form of this, is adjusting that as the market gives you more information. Same moving averages, but applied to a 5-minute chart. And you can see how these will all work together. And that's why I like these moving averages, because they will synchronize. So on a 5-minute chart, we can tell that we were bumping into the rain line, and we go right back underneath the blue line. And now we know we're in the umbrella trade, and you should be looking for target short side. And then we get the snapback. Obviously, this was the lunch contra. And then we get back under it and settle down into a quiet afternoon. So this is the umbrella pattern, obviously, once we come back under all of these moving averages. So the day before was a King's Day. This was a Queen's Day. We were never able to take out that high. And that was the first signal when you wake up in the morning, you see, they've abandoned the previous high from the day before. That should signal that we're doing a retracement with no idea how far we can go, but certainly it would be a retracement. So you're looking to hit some bounces, and then consider if the charts suggest the buy the middle or lower, you can take those shots. But in general, on a day, once we come out hard and fast, most traders, I believe, should be looking for the morning trade, the primary trade, to test support. And that's what we'd call for. We're testing support. And this was at is the order flow. This was at 809 area. Remember that 809? I said this is going to be supportive. This is a squeeze pivot, and sure enough, that worked. And then it gets taken out overnight. We get the downdraft. We retest, but never can take that back out. And then it's down, 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 and obviously going back into that 50 area where we closed, holding the big number 500 for our system. Now, this is an example of dynamic pivots. They change all day long. So if we have a football field, then we're going to move the chains up and down the field as one team takes possession and the ball moves, and the ball obviously is the price. So we know that we had the high at the news high, and this is just a reflection of the range after the news high to the low. And you can see why I felt that this was a reasonable area for us to need to get above if we were going to make any new highs later in the afternoon. The 655, 660 area, because it was the middle of that swing. And then here's a subsequent bounce that we can see. Again, dynamic pivots where we had the low that was made, and then the bounce high coming up into that 46. Couldn't get past that last chart we just showed, the middle. Came back down, bounce, and then this was the range where I had suggested 575 to 580 is going to be the important resistance that we need to break to get out of jail based on this swing. So this is another example of a dynamic pivot, because these different time frames, different size swings can all be measured. And this is the angels and demons. Taking a quick peek at this to wrap things up. And you'll remember my friend Anthony had talked about applying the RTH chart, applying the pivots to use for our resistance or support, and he liked it for the RTH. So what I've done is taken it by extension, the VWAP that he had talked about, and applied it to the overnight chart, because you can't live in a void. You can't pretend that action didn't happen overnight. So you want to see that too. So this is applying his idea to the angels and demons, but using the overnight chart in a 5-minute chart. We can also note that we came down and we tested the prior day's angel, and that held this 25 area, despite the fact we obviously got down close to the 500. The market set up there and was not able to correct that. And so it did respect the demon. Once we got the head of steam underneath it, that was resistance. And we came back and challenged the previous day's angel. And that doesn't happen all the time, especially in these large ranges, but we note that it did. So these are some of the important charts that I look at. Every one of them tells a different story and gives us a picture. And I like to look at all of them. And then obviously during the market, you can't think of everything, but if you do your homework and you study ahead of time, some of these ideas will stick in your mind as the market is making its move. And the most important thing is obviously to, when you're wrong, to get out, say ouch, and then look for another opportunity, and sometimes you'll get back in. That happens a lot, where in a move that you think is going south, you'll get stopped out, but you say, I want to keep on looking for my hit and run in that direction. So rather than let it run against you 50, 60 points, you take the stop and you look for the bounce, and then you try to hit it again. Here's a good example. You expect the lunch contra to to come up and try to get out of jail. And then if you decide you want to play again, you're probably better off most times, not always, most times until you're proven wrong, to go with that trend and see if you can go back and do your retest. Because usually you'll come back and do a retest. If that holds then, and there's more time in the day, then you can get that stronger bounce to close positive. So those are the things I like to look at. Hope this little journey helps you understand a little bit more about my system and dynamic pivots and static pivots and how we put them all together. If you'd like more information about my system and anything I can do to help you, then obviously get in touch, and contact information is on the website, or hit me up on Twitter. Thanks for listening. Have yourself a great day. Z for MarketWizards.com, signing off.